afternoon, everybody. It is really wonderful to be able to spend time with you today, albeit a little different again, as we did this next year. I'm hoping and praying that next year we'll all get to be able to be together. But having said that, I'm really excited to be able to spend time with you guys, and then also with two great guests, Thomas and Cristina. And we're really, we just been chatting a little bit ahead of this, and I'm excited about the opportunities that is happening in Europe, and these perspectives that these two have are going to be really enlightening. So before we dive into it, Thomas and Cristina, we know a little bit about who you are. Could you talk to us about your fund and maybe your thesis and the kinds of companies and stages that you work in? Thomas, maybe we can start with you.
Okay, cool. Yeah, no, happy to. Well, first of all, thanks for having us. I'm really excited to be here. Yeah, so I've been with Cherry for the past 6 years, which is also when we started investing with Cherry. And back then, basically, we looked at the European ecosystem and saw that there were not that many funds that were sort of seed focused. The venture landscape as a whole wasn't as evolved, and sort of we tried to use that as an opportunity to create or set out to create the best seed platform for founders in Europe. That's what we started with, and that's exactly what we're still doing today. So we're a strongly seed-focused fund. We invest across Europe, want to back the best founders at the earliest stage, as early as possible, and yeah, we invest with high conviction. So we have a relatively concentrated portfolio, relatively small group of companies that we're backing each year. So really go out and try to support them a lot from seed to Series A, which is really our goal, so that they can raise the best possible next A round. And we've built this fund with this ethos of being founders first, which sort of has this double meaning. On the one hand, we're a founder-led fund. We've all been founders ourselves before. And at the same time, when we started this, we saw in the market that, maybe the European landscape back then wasn't as evolved as in the US, and wasn't as founder-centric. And we realized that this is something where you can clearly differentiate if you're fast or if you're decisive, and you can just deliver a better experience to the founders who are going out and fundraise. And yeah, that's what we do. We're industry agnostic, given that we're just focused on the stage. And yeah, that's
how big is the portfolio? How big is the portfolio?
I think we have now like over 50 active companies, and wow. We back around 12 companies a year.
That's fantastic. Cristina, tell us about your fund and you.
Cool. So Indico, we started the fund like 2.5 years ago. Before Indico, I founded Talkdesk, which became quite a success story. And then Indico was born to solve a bottleneck in the local ecosystem, which was the fact that there were no independent funds and there were no professional VCs. And Portugal, which is where we are based, was already becoming like making people curious and becoming like an interesting hub in terms of tech, but the capital was missing. At Indico, we have a portfolio of around 20 companies, a little bit more than that, closing a bunch of investments right now. We've started as seed to Series A funds, investing in local founders or companies with a local operation, but with a global ambition. We've expanded to Spain, so we are becoming more and more active in Spain. And then to tackle another bottleneck of the local ecosystem, we started a small accelerator fund and program. So today we do from pre-seed to Series A. Fantastic. Also industry agnostic, like more also geography specific.
Okay, so that's what you mean by like local. When you say localized, you meant starting in Portugal and then hitting those markets. Okay.
Portugal and Spain, and then going abroad.
That's fantastic. On a personal note, I was so excited last year. I was going to spend my 25th wedding anniversary in Lisbon, but obviously I couldn't get there, but I tried. I was so excited. So talk to us a little bit about kind of the fundraising landscape, I guess, from a geographical perspective. We did chat a little bit about the kind of Europe is so complex and so different, yet there's some threads of commonality, obviously. Thomas, what kinds of things do you see as differentiators in specific geographies, based on Germany versus France or some of the other places that you're seeing?
Yeah, I mean, generally, I would say that markets are looking much more alike, luckily. So, like, even if we compare US to Europe as a whole, but obviously, there's still like smaller differences. I feel like the ecosystems that were strong in the past, so London, Berlin, Paris, the Nordics, they're all getting stronger because there's more sort of catalyst events and more big outcomes, and obviously that fuels the market so that these ecosystems are getting even stronger. But I feel like also the other geographies are catching up, and there's more and more founders emerging in these geographies as well. So as a fund, maybe in contrast to Cristina, like, we don't really care where the company is based. We're ourselves headquartered in Berlin, but the team is spread out across Europe. So we have someone who's in Paris, we have people in London, in Berlin, Munich, in Stockholm. So for us, these are the major ecosystems, and obviously where we spend a lot of time, but that wouldn't prevent us from backing companies elsewhere. And I would say, at least, obviously, fueled by the past 1.5 years, we increasingly don't care where the company is based or whether the entire company is based in one place or whether it's a distributed team. Overall, I think this is a positive sign for Europe because people can live in the places that they want to live. There's maybe sort of like a cost advantage for some of the founders, and maybe it's a chance to sort of, if not physically, but virtually bring people closer together in Europe.
Yeah, that's fantastic. So, Cristina, you guys are, have a similar perspective, obviously, with seed and up. What's your kind of perspective been in your region with Portugal, and as you started to go outside of that, what's your take?
So I think if there's something that we've learned in the last couple of years, it was that, like, the early stage is much more local. I mean, if Thomas is going to do a deal with in Portugal, like, is most likely going to call me, right, and ask, like, who is this company? Who are these people? So I think, like, there's a mix between, people can be anywhere, but like the location where you are and having local investors back you and people relatively close to you, it's still important, although the network is becoming more and more powerful. So that's something that, like, I've seen. I don't think that's going to change with this new remote setting. My favorite trends in terms of geography and during the pandemic has been that lots of European founders that used to live in the US and in other different geographies, they moved back to Europe. So I think, like, more and better companies are going to come out of Europe because, like, suddenly the experience that we used to have in the US, and it's super important to accelerate, like, high growth and makes a difference. Now some of those people are back in Europe, and that's super fantastic. Exciting.
Yeah, it's interesting you talked about, Thomas is, if he does something in Lisbon, he's going to talk to you. I want to talk a little bit about this idea of network, because what you say seems to be true everywhere. I don't live in a really big city. I live in a medium-sized U.S. city of Raleigh, which is the capital of North Carolina. And if you're a seed seeker or a founder, you're going to talk to the same, like, 3 people. Every deal is going to start with the same 3 or 4 people. I don't think that's a good thing always, right? Because if their bias is towards certain kind of industry or certain kind of talent, right, then you might get no's if your network is larger, or at least the eyeballs to get on is larger, you might have a better shot. So with this year being what it was, have you seen some positive impacts on the network effect for people seeking a seed round, when I think before you tended to be restricted as a founder to these 4 people in Berlin. Or I'm being extreme, but you know what I'm saying. So Thomas, what impact have this year been like as an investor on the ecosystem, you know, and finding these founders? Because I think a lot of sorry, let me just add this. A lot of founders believe they don't appreciate that on the deal side, on the investor side, it's just as hard finding good deals, right, as it is finding money. And so I love your so the network effect is so important.
Yeah. I mean, it's an interesting question, and obviously also something that we discuss a lot internally. And if we look at the deals that we do, it is obviously a lot of the deals are coming through the network. At the same time, like, you know, we almost intentionally try to go beyond that, right? Like we do a lot of outbound. We reach out to a lot of people beyond our network. I think network always comes in handy when you sort of like need this heuristic. And as Cristina said, like if I see a good founder in Lisbon and like she can, you know, immediately say, I was like, look, these people are incredible. They've killed it in the past. You know, obviously that's a strong endorsement and something that will factor into our decision. But I think we want to build as diverse of a funnel as possible. And I think, you know, that doesn't work if we're purely backing the people that look like us. And it also doesn't work if we're purely sort of reliant on our immediate network, right? So it's a very conscious effort to go beyond that. What's the impact that the pandemic had on this? I'm actually not sure. It's really the pandemic that sort of like, you know, made us move more into this direction. It's rather general, that like awareness around the fact that we want to have as diverse of a portfolio and sort of like, you know, by definition, we're exclusive because we're only backing a fraction of the companies that we speak with, right? But we're like we want to inclusive who we consider.
Fair.
I think what the pandemic brought, I mean, like, for example, in our case, and like I'm really bad at managing relationships digitally. I like to go out for coffee, for drinks, for whatever. So I had like catching up with people on WhatsApp is not a thing for me. So I think what the pandemic forced us to do, because the world became way more transactional, right? Like you go on a Zoom with a specific mission, right? It's not that you enjoy jumping on a call. So 100%. I think it forced us to be a little bit more like deliberate in making sure like we have like a good coverage of like the founders that we are discovering. Because before we would speak with a lot of people, we would go to the events, we would like things would happen naturally. And during the past year, like unless you have a plan and like you're conscious about going out there, backing a diverse set of founders, like even catching up with VCs, like you end up co-investing probably with the last person you spoke, right? Because, oh, I have a deal. Like, I know that guy's looking for, he's excited about this area. Like, hey, like, here is an intro. I think this year we really need to like be organized in that regard in order to do at least a decent work. But it has been a little bit more challenging than us like being in conferences together. Like I used to go, like we would just catch up in conferences. Our life would be a little bit easier in that regard.
Yeah, I'm 100%. I'm 100% with Cristina. I think this element of serendipity got lost to a certain extent. And, you know, you guys are maybe a little bit ahead with regards to reopening in the US, but like we recently had like the first couple of dinners again, and like it's incredible. Like when you see people in person again, you feel much more alive. There's like more nonsense that you talk about that actually leads to like ideas and stuff, and I think that's something that will be
and related
very
with that,
very quickly.
And related with that, like something that I think about from time to time is the fact that different geographies are adopting like different measures of going back. Right. So if like let's say like a company that's remote distributed with multiple offices around the world, but if the US is opening before, like those people will naturally have an advantage, right? because they will be able to like interact more with other people, that will boost creativity, that will allow you to like show to your boss maybe in a different way, like how committed you are. And I think like I'm a little bit afraid some geographies that are handling the pandemic worse than others are a little bit left behind, because suddenly these people need to be locked at home. It's not that they're going to be forgotten, but like I think there will be a natural different treatment. And that's quite interesting to think about, a little bit scary, and it's going to happen for sure.
Yeah, it's kind of like your answer earlier, Thomas. She's like, I'm not sure yet the impact. That's going to be at one that I think we don't like, because in the States, you're right, we are opening sooner, but it's still different. Like each state is different. And so you might have one area open, quite open, and been that way for golly 6 months. And then some are just now, like you're saying, getting out. And it does have a really important impact on the development of these networks. You know, I remember, I think it was early on in the lockdowns, a friend of mine said, when was the last time you hugged someone that wasn't in your family? And I was like, wow, that's a big deal, you know, and humans were meant to be together. And so I think there are some negative impacts of these things that we're yet to realize. What are some of the, I think, efficiencies that you guys have found? Because I think you talked a little bit about the intentionality, Cristina, right? Of the process. Is there anything else that you guys, like, are deals happening faster? Do you get through them? Like, what are things that are positive from this that you think may stay? So Thomas, why don't you answer that one, or kick us off?
Yeah. I mean, we've touched on it earlier, right? I think these Zoom meetings are in a way very transactional, but to a certain extent, they are efficient. So I think, you know, in the past, we've always said, like, look, it's great if we meet the teams that we back in person before we actually make the investment. I think that requirement is gone, and it's gone for forever, right? We're gonna continue to back teams on Zoom, and then, you know, we're still gonna make an effort to meet them in person, and, you know, obviously spend time together, but like it's by no means going to be a requirement. So that's for sure an efficiency. I think what we will at the same time see is, like, if you can win a deal by being close to the founders, people will make that choice to fly over to city XYZ to do that.
For sure.
I think, you know, we went into the pandemic as a partly distributed team. By now we're like a firmly distributed team, and I think that's another thing that we'll say. I think that's an efficiency for us as well, that we can be in different locations within Europe, that we can be local and close to founders. I think that's another thing that's here to stay. And about the office thing, I'm actually still puzzled. I'm not so sure. Like, I'm back in the office now because we can, and I'm really enjoying it. And it seems like if I look at our office, others are too. So I could imagine this being a thing again. That's maybe the sort of like, the first initial take and like things that come to mind.
Yeah. Christina, what were some of those efficiencies?
Same on my side. I think like especially in geographies like Portugal, where like you have like very strong technical talent, but then like maybe you lack like sales and marketing, and you need to look abroad. Like, I think people would still try to hire locally, but now with this distributed way of working and the remote trend, that's going to be here to stay, like for sure. Where I see the biggest impact is not on the startup side, because like startups, you know, like everyone is like working synchronously, like already can coordinate very well with other geographies, but in the corporate world, and that's fascinating to see people discovering a new way of working. And I'm excited with a bunch of opportunities that are going to come from like that trend. And I mean, as Thomas mentioned, something that I really feel a big difference. We used to go meet companies once a month in person. Like we like to work closely with them. So we made that effort, and boards are now all online. Like, and I think it will require everyone like a significant effort to go back to that mode. because now
Yes.
it's like a bunch of hours in front of the computer, and before it was like you either drive or fly or whatever. Right. And you're like, oh, like can't be bothered to spend one day to go meet this company like every month. But that makes a big difference. Like you understand the context better. Maybe you spend a couple of hours in the office, you go out for dinner with the founders. And I think like building these relationships and being close to companies in this way, it's what makes a difference in the long term. And that was somehow lost. I hope we can recover it, but I'm not sure it's going to be a natural thing.
It's interesting. I think in probably the competitive situations where, maybe a startup has a really great opportunity and a few term sheets on the table, the day that a VC loses a deal because they didn't want to get on a plane is the day that people start getting on planes again. Same thing for sales, right? Because I think during this pandemic time, we've been able to maintain our volume through existing relationships or willingness to do this. But I think once somebody loses, and we'll probably, that's my prediction, but we'll see. So on the shifting a little bit from a perspective as a founder turned investor, this is something I fully identify with you guys on. We've all been founders in this group, having sat on both sides where you're, having to hope for money and do execution to then being the shepherd, I guess. What is I think the biggest benefits? Because not every investor that we run into has ever founded a company and executed, right? What are some experiences that you've had in particular that has made it has been a very valuable experience for you as an investor, whether it's how you find a company or how you shepherd a startup? Because I think that's probably a good word for the seed stage, right? Because there's a lot more advice giving. So Cristina, tell me a little bit about maybe what you found as a founder that's made you a good investor.
Look, I'm still a crazy one to be running a startup while I invest. So, and honestly, awesome. I think that's a big advantage because like as time goes by, like you tend to forget what it is to have like all these operational issues, like struggle with finding talent. And for example, if I compare my most recent experience with the one with Talkdesk, which was like 10 years ago, like in 10 years, so much has changed, right? So now, like even a B2B product needs to have like pixel perfect UI UX. Otherwise, like no one is going to use that. Like talent has become like way harder to find. Like marketing has changed completely because the dynamics of the go-to-market are like there's way more money like being thrown out there. Like it's a different playbook. So the fact that you understand very, very well what founders are going through, and you can help them like with these operational issues, and it's more of a conversation at the same level, like makes founders take money from you a little bit more interesting than from a pure financial investor, and that's something where Europe and the US are different. If you look at the VC landscape, that's why Thomas, as a point in their thesis, is like, no, we've been founders. We know what you're going through.
Right.
Like the majority of the European investors, like they are like financial managers. If you go to the EIF, which is like the biggest backer of the EU funds, they're like, yeah, where's your like financial track record and stuff? Like I love the fact that I understand very well what founders are going through, and I think they also understand there's a difference.
Yeah. The phrase we used to use was, "You eat what you kill," and as a founder, you have to do that, right? And so having that fresh in your mind is very, very appropriate. So Thomas, what's your perspective on that?
I think the one thing that as I said in the beginning, in the introduction, is like we started Cherry with this intention of building the fund that we would like to have had when we were founders, right? And I think the one dimension that I think most funds, maybe even until today, underestimate and most investors is like the time dimension. As a founder, I simply don't want to spend a lot of time in the fundraising process because it's simply a distraction to what I'm building, right? And like the fundraising in itself is obviously very important towards the success of the company, but it's like not that's not the end goal to like constantly be fundraising. So like, again, like when we started Cherry, like being fast and efficient and like having a decisive decision process was, I think, one thing that differentiated us strongly in the beginning. And maybe we played our part in making the seed scene in Europe more competitive, because I do think most funds stepped up their game, and it's a lot more competitive. Everyone got better, and I think that's a good thing as a founder. But I think this like time dimension is the one that's been underestimated the most by investors.
Yeah, it's interesting on the seed side too. We're seeing the trend of the big funds, the ones that you've all heard the names of, starting to go down that way,
and also being incredibly fast.
Yes. So talk to me a little bit, because this is very related to what we just spoke about. Why starting from the seed, starting from that perspective is better, I would argue, maybe more advantageous or better for the founder. And then what have you seen in the trends in seed stage? Like for us in the US, we see a greater check sizes are getting really big for seed funds. So can you speak about that just a little bit?
Yeah. I think if you're starting out, like, who do you want to have on your side, right? Like, you want to have someone who, on the one hand, if you want to be left alone, that in a way leaves you alone, right? If you need support in certain areas, you want someone that you can call all the time, right? And I think that's right. That's a bit our positioning. Like, we support you as much as we can, but we also let you run your company, right? Like, we're not the ones taking over. And I think having like eye-level conversations with founders is what, in many cases, hopefully turns founders to, take us as their seed investor. So that plus what I said earlier, and like offering a very clear process and say, hey, look, like there's going to be like maybe 2 more meetings, then we're going to make a decision. You're going to get that immediately. And then in some cases, it's also different, right? There's founders that we met maybe a couple months ago and that we've just stayed in touch with and gotten to know over time. And they also wanted to get to know us over time so that they can make the best possible decision, right? That's sometimes if you're not under time pressure and you just really want to make a conscious decision, like we also offer that, right? We also spend time with founders if they want to before they make their decision. In the end, it's still one that's lasting, because you're going to be on the cap table for a very, very long time, right? And that's not a relationship that is easily dissolved. Wow. Yeah, that reminds me of a follow-up question. Cristina, what's your thoughts on that notion of the benefits of this approach of founder first, as going up as opposed to starting large and going down as an advantage for the founder? I shouldn't say better, it's just different, right? Yeah. It's just different. Yeah.
I think the market is changing in a way that reflects like the dynamics of there's just a lot of money and founders get to choose. So then, I mean, like, depending on personality and like what do you believe the startup world should be, you might take money from one investor or the other. So like, I think it is what it is. Like, in regards to the rounds becoming bigger and bigger, like, right. Also, like, we need way more money to win these days. Like, depending on the business, like, the world is so competitive, like hiring the marketing, engineering talent. I mean, like, this money is needed sometimes. But also, like, we all know, like, too much money can make you just solve problems in a way that you're just going to throw money at the problems. I think some frugality is very good and healthy. So there's a balance also that founders need to pay attention to. Sometimes, I mean, like, there's different theories, right? Like, if there's money available, take all the money. Okay, like, that's very good, and money will get you far. But it's very important to balance that with being realistic in regards to where you're investing this money, and if like this is just to build like a castle that cannot be sustained for too long, or if you're really building like super solid foundations.
Yeah.
And yeah,
maybe Jason, if I can add one thing, if I interpret your question rightly, like you can also be fast if you don't care. And if you're a multi-billion-dollar fund and you're leading a 1 million seed round, right? That's a drop in the market. And like you, as a startup founder, you basically have to realize that you simply don't matter for that investor. It's pure optionality. And then, you know, if things don't go well, there's 100% certainty that this people won't engage with you any further, right? And like, you also won't raise it from another fund because, you know, they'll look at your big investor on the cap table and see, like, wait, why are they not like following on, right? And so that's the sort of another argument for like picking an expert in that respective stage, like someone who can be fast, but like at the same time who also cares and for whom this investment is an investment that matters.
I think you've teed up kind of another conversation too, or another thought. As a founder, you know, especially on your first startup, you do things because you don't know, you know, you don't know any better. I can think of like taking money, you know, taking money too soon, or taking money, you know, I don't want to say the first money that came along, but you just mentioned this cap table issue. And Cristina, you mentioned taking too much money, which sounds strange sometimes to a startup. I love this idea. I'm biased towards frugality as well. You know, I can think of the first raise that I had to do, the first term sheet that I got back. I look at it now and I should like just run away. Don't even like have another conversation, you know, but when you're a founder for the first time and you get a term sheet, you're like, we're done, you know, let's do it. What do you wish you knew as a founder then? Right. And now that you're in the investor seat, you could kind of tell yourself, you know, and I'm saying that because we have so many early stage or people who are trying to get money now that could benefit from that learning. And for me, it was patience and be okay. Like if your vision is awesome, it's going to be awesome next week. It's going to be awesome next month, right? Don't move too soon for terms that aren't that good. And I didn't know often that the terms weren't good, right? So that was my learning. You know, what kinds of things do you think you could tell, you know, or wish you knew, or what that you've learned in that you know, now?
Like on my side, the entire like VC dynamics, I think is very, very important that founders understand that. Like when I flew for the first time to the US, I was reading venture deals on the plane and I was like, oh my gosh, like, I don't understand anything about like the what's going on here. I think
liquidity preference. What? Yeah, right.
Like, look, like it's just like too technical, too far away from what you're living in your daily role. It was like insane, but that feels like, what am I getting myself into? Like I don't understand shit about what's going on here. And I think like it's very, very important for you to understand like those dynamics of like, it's important that the fund has a significant stake, so they care about you, they help you, their success is your success. They will have money to follow on. So like then like you don't end up in the situation that Thomas referred. So all of this is very important. I think at Talkdesk, like we're very, very lucky. Like if you raise too much money, like the more money you raise and the higher your valuation, the higher you put the bar to yourself. Like basically that's what happens. And I'm not sure founders really understand that, because like usually you optimize for valuation or more money, but you need to understand what that means. And most of the times you're just putting the bar higher and higher. And then like, if you don't get there, like it can put you in really, really a bad trouble. So founders need to understand the game they are playing. Otherwise, like things can go wrong.
You talked about cap table, Thomas. Like cap tables are harder to get out of than marriage, right? And so,
Well, people say, yeah.
So yeah, what's your learning?
Yeah, I think one thing that's great is like when I was fundraising for our company, I think there weren't that many doors to knock on, at least in Europe at the time. Like I think in general, like things have gotten much more favorable for founders. So overall, like there's less crazy terms out there, and it's more founder friendly in general. So that's great. But like I think one thing that sort of I would have liked to know is that like you don't need to have like answers for everything, right? It's actually we engage with a lot of founders where it's like very clear that they don't know the answers to certain things, and like they're pretty upfront about it, like also in a way almost like unapologetic. But like you know, when you see that like as a founder you've thought things through and like you work on the things that you can influence right now, that's sort of enough, right? If the vision is there and if you have a clear path of where you want to go, it's completely fine. And we as investors are completely fine with this, and we're willing to take this type of risk. And I think that's something that, you know, at least I as a founder for sure underestimated in the interactions that I had with VCs back then.
Is there anything you miss as being a founder?
Look, I'm going through that experience. Like,
I know.
Don't get me started. Being a founder is hard.
Not a fair question for you, Cristina. But
yeah. No, but I you know, building a fund, like we run Cherry like it is a startup, and
I was gonna say it's not unlike it, right?
It's not that different. Like I do think we have found product market fit, so I think maybe things are slightly maybe not easier, but like sometimes maybe slightly more pleasant from there onwards. Like you sort of like know what you're doing, and like.
And you never reach hyper growth, right? So like that helps as well.
Yeah, like that's true. Like we're never gonna like, you know, have a gigantic team or something like that. So, and you know, there's certainly benefits to that. I think one thing that I truly enjoy as a VC though is that you can like dive into the very different areas. And I think as a founder, like you need to stay more focused. And there's also cool sides about like being focused and like really going down sort of like this one path and being fully on that one. But yeah.
That's great. So, you know, as we wrap up, I guess I wanted to, before we wrap up, I'd love to ask you if we can squeeze in 2 more questions. You know, what kind of trends are you seeing in technology? Like with us at Oracle, we're like you. We don't care about industry. We don't care about region. In fact, we went virtual about a year before the pandemic, which really put us in a great opportunity to engage with startups from all around the world and see all these things that you're talking about. So we love that. But you know, because of the technology that we offer, it's become easier for smaller early stage companies to engage with machine learning and AI and some of these high compute demand kinds of things that can really be applied to all industries. For us, and then side plug, if you are a startup, you can just go to oracle.com/startup and learn about that. But what are you guys seeing as up trends, or are you not? You know, what do you tend to see as where things are going? Cristina, I'll start with you, and Thomas, you can follow up.
Look, I'm a B2B AI person, so everything like the what you mentioned really resonates with me. Like, I really see a big opportunity in the B2B space, like multiple areas for people to just work smarter. Like the world still depends a lot on manual processes, pen and paper, and like that can't go on for too long. So those are the things I'm more excited about, and digitizing entirely new industries that was people like they never thought they were going to become tech. Part of the tech revolution, and that the pandemic forced them, like on a personal and professional level, to just adopt digital tools. And now, like there's like the gap to digitizing entire industries just became like way smaller, and those like a little bit more boring things are the things that really excite me.
That's fantastic.
Yeah, same here. I'm in the same camp, and I think I like the same stuff. So I'm not super controversial on that part. I think one thing to add, maybe like this whole part of decentralization and like crypto is I think something that's very interesting. I think if you think about the big monopolies, they're there because they can capture data and like do stuff with it. And I think this is the theme that we like in there is that if there's more open data and sort of like APIs that you can build on and these kind of things, it can foster a lot of innovation because there's now suddenly, an individual developer or creator that can build on top of this. And I think this will foster a lot of innovation. And that's something that we're for sure also excited about.
Yeah, that's fantastic. And likewise for us. Well, I'm very grateful that you guys were able to spend time with me and with the Startup Grind community. I really hope I'll get to see you guys in person next year. I know this is, Cristina, you talked about, I mean, man, we would all be getting coffee right now together, which I wish we could do. Startup Grind puts on just one of my most favorite events in Europe. And then hopefully we can maybe see you in Redwood Shores at the Global next year as well. So on that, we're grateful, we're thankful, and we will turn it back over to the Startup Grind team. And I hope you guys have a great rest of your conference. Thanks.
Thank you so much.